everybody. Thanks a lot for joining me as at the close on Thursday afternoon. It has been another relatively bullish session, you could say. In and of itself, we did close up just over 36.5 points on the S&P 500, very close to 1.3%, a pretty decent day's worth of trade. On the Dow Jones Industrial Average, another little gap up 326 points. We have negated, of course, that of the losing day on Friday. We've more or less made back all of those losses in the market as, again, this support area across all three of the US financial indices continues to hold. Really, for the entirety of August, we've been stuck in this really very tight range-bound sort of environment between support and resistance. And again, we've been following along with the continuation of those Bollinger Bands. I'm going to flick to those very shortly, but just to sort of round out that of the daily movements on the NASDAQ, you can see we closed up over 115 points. A nice little long day Morobozu candlestick there. The problem is, however, and again, I just want to keep your expectations of reality in check at this current time, is that although we are seeing, again, consecutive series of white candlesticks, we have seen this, of course, in the past as well, especially during those two periods that I've just highlighted for you on my chart right now. Really, the defining factor, so to speak, is going to be the markets collectively breaking above the range-bound resistance that we've been stuck in really for the entirety of August. Until that happens, you have to assume, unfortunately, at this particular juncture, that the movement of the ship, so to speak, to use the analogy anyway, is that, again, we're still rocking side to side between the buyers and sellers having very short-term control of the market, depending on, of course, what side of the bed they jump out of in the morning. I don't want to get too carried away with this bullish move that we have seen not only take place today as at Thursday, but also really which began on Wednesday. We're going to have to follow along with this, but again, the line in the sand, so to speak, is going to be the definitive close, all right, and then the continuation above 8,080 on the NASDAQ. For the Dow Jones Industrial Average, we got very close to this trigger at 26,471 intra-session today. Again, we're still yet to actually push above it, let alone close. So I've just moved the trade trigger. Let me just undo this and try and move it over as I speak to you right now without actually adjusting the price. There we go, 26,471. On the Dow Jones Industrial Average and on the S&P 500, 2,946. You can more or less round that up to just over 2,950, but I think you get the point. My biggest contention right now, and again, I just have to make this very explicit, very public, is the simple fact that across the board, really on the markets, we have established once again another gap. So when you see this, especially during the midst of a Bollinger Band squeeze that I've been speaking about for a couple of weeks now, generally what's going to happen, unfortunately, and again, it's sort of the bittersweet sort of scenario of the market right now, is that when you see this bullish activity like we did today, again, markets up over 1%, closer to 1.5% on the daily movement, when you see these original sort of reactions to potential headlines, of course, again, generally what happens is they will fill, and it makes a lot of sense. Again, unfortunately, I hate to be the bearer of bad news, but I'm just trying to keep this in perspective and to be as sort of non-biased as possible and just let the technicals sort of talk to us as I do each and every time I sit down in front of the microphone. But again, you have to think about, if I can push the number 6 key on my keyboard, you have to think about the continuation of this Bollinger Band squeeze. It's very rare in this particular scenario that we are just going to see definitive movement above this resistance area. It is very rare for this to actually play out the way it is sort of set up at the moment. It would make a lot more sense, so to speak, that even if we came into the session tomorrow on Friday to see the markets actually close these open windows, and again, I'd be sitting here contrary to sort of the prevailing market sentiment saying, well, this is again another healthy sort of bullish continuation signal that we're seeing, especially after the sort of the bearish session that we established, or at least rounded out the week last week. So again, this is all very healthy. All right, a lot of people, again, unfortunately, are going to be on the wrong side of the market movement when the market decides to make its move. And for those of you listening again in this public forum and those in that Pivot Point Pro analysis class that we do Saturday, again, nothing has shifted whatsoever. I'm bringing this information to you as we obviously move through the day or move through the days. But again, I just want to keep this as neutral as possible. Expect the markets to actually close these open windows to essentially give back these gains that we've made, or at least printed as at Thursday. And again, it's moving into the broader sort of setup of a Bollinger Band squeeze, which is going to bring with it that of volatility when the directional movement, or at least the market, chooses to move in this direction. All right, so I just wanted to make that very, very clear. If I show you this across the board, the S&P 500, you can see that top band again continuing to slope down. It has sort of mellowed out a little bit over the past couple of sessions. That's to do with obviously the price over the past 2 trading sessions gapping to the upside. And then of course the lower Bollinger Band, this is very important. It has actually stopped turning down and it's starting to move sideways. When you see this, this again adds to the support, the confluence of support that I've spoken about. And it also really leads to, again, the establishment of that next higher low. A lot of people, unfortunately, losing their mind, so to speak, a little bit with the market correction, or the market correction that we have been in for really the entirety of August right now. And again, they sort of blow it out of the water in terms of just how deep, or how sort of how negative or how bearish this is actually going to be. By all means, at the moment, it really appears as though this is that defining support area that's continuing to hold. And again, we're starting to see, again, bids enter the market, and the market itself trying to push off from these support lows. Every time the market has sold off 1, 2, 3 occasions, you could say, the market is stabilized, and very quickly it's slingshot back to the upside, right? Very little, if any, technical damage being done to the markets. Again, it's gifting you the opportunity, right, to step up and to actually accumulate or buy the market long-term leaps if you wanted to, or options long-term plays, multi-month into the future, at least 2020 more or less at this particular juncture. And again, you can simply sit back, allow the market noise to continue, right? This headline-driven market at the moment, before we see things settle and the market continue on its merry ways. All right, so I just wanted to make that point. Now, if you have a look through the top 12 individual trade lists, Apple's a little bit of an outlier. It has been one of the strongest stocks. It is holding up relatively well, up just shy of $3.50 today. But if you have a look, pardon me, at a bunch of these stocks, I hope that you can see what I'm seeing. You can see multiple sort of support areas at logical areas of support, all right? Now, we haven't definitively moved above a bunch of these bullish trade triggers yet. You can see that on Amazon. Boeing had a really very good week last week above that 339 trigger, but again, it's stabilizing, and it seems to be at this point breaking out of a sort of a bull flag continuation. You've got Baidu, which may have just actually priced in a bottom after its earnings call. You've got Caterpillar, which has produced that of a reversal gap potentially at this juncture. We'll have to pay attention to that. We'll see whether or not this gap closes. It doesn't necessarily have to, all right, in this particular scenario, or this environment, or in this context, you could say. If this is a legitimate reversal gap, well, then you've just seen the bottom of price in Caterpillar. I'm going to keep it at 119.60 and just follow along with it, as at Friday's session. You can see a little bit of a gravestone doji here on COP, but again, you're getting these sort of temporary double bottom sort of setups in a bunch of stocks. You've got Disney moving above 136.92 definitively, a big change from obviously where we were as at the close on Friday. If we bring on over, or at least move on over into Google, a lot of people were freaking out about the break of that very tight trend line. Again, we're stabilizing, and we're up another $20 today. Still yet to actually flinch above 1,212. But again, there are a lot of sort of green shoots underpinning this market. In my opinion, it's only a matter of time until we really see that of a short squeeze play out, whereby you're going to see prices move into a completely parabolic and ballistic sort of upward moving direction. All right, I do believe it's brewing. And it's really sort of surmised quite well by the Bollinger Band squeezes, which are happening in the NASDAQ, the Dow, and the S&P 500. IBM up $2.12, still yet to trigger into this trade. But again, things are holding up relatively well. Microsoft, which has been that of a market leader, so to speak, look where it is. It's back up at 138. Its high price was just shy, or really above 141. So again, we're within sort of a stone's throw away, $3 away of creating another new all-time high on Microsoft. When you couple that with with Apple, which is holding up well, and potentially the basing pattern setting up on Amazon and also Google, right? If I push the right key here, you can see another Bollinger Band squeeze on Google, and also the same on Amazon. You can see why essentially right now I'm sitting here, and all of this is sort of falling into place. It might be a little bit sort of convoluted for some people, or maybe even the majority of people who watch these videos and are trying to make sense of the markets and the technical sort of setups of the markets and individual stocks. But this is all very healthy. All right, outside, of course, of the news-driven sort of, media take or the sentiment take on the markets themselves, right? A lot of these stocks and a lot of these markets are just going through the natural ebbs and flows. They're moving through the hoops, so to speak, before they can unleash that next upward move. So again, we're starting to see the coiling of the market. It still isn't completely defined, nor has it broken out. And again, largely, we're just sitting here on our hands. If you're choosing to actually enter into market positions, good for you. I think it's a very wise move to be making at this particular point if you haven't already done so. And in the meantime, just sit back and allow this market again. If it chooses to sell off on Friday, so be it. I mean, it's not going to bother us, or at least it shouldn't bother you whatsoever, because you should understand that there's bigger things underpinning this market. And again, a lot of this bearish sentiment is, unfortunately for the bears, going to dry up, and you're going to see a squeeze in price to the upside. All right, I'm not shying away from that. I've been very explicit and very clear about that. And again, you're really starting, or at least I'm hoping that you are starting to see, right, the disconnect between what the market is doing and obviously just the bearish sentiment out there in regard to, again, the spike, or at least the escalation in recessionary fears, or whether it's the trade wars. Again, this is all looking to shoot to the upside at this particular point. Nothing has changed whatsoever. All right, so I just wanted to leave you with that as at Thursday. Again, it's a little bit difficult. I wouldn't say difficult, but it does get a little bit bland, I could say, when I'm sitting here just talking about more or less the same thing. When you study the markets for an extended period of time, you understand, or at least you begin to understand, just how slow the market actually moves. In the heat of the moment, it might really seem, or at least if you're trading on an intra-session time frame, of course it's different, but if you're looking at this technically, and really being objective in the analysis and applying different steps of technical analysis to the actual market. You understand the process that markets go through, and as such, time can really feel like it's slowing, and it really sort of pains on you, or at least when you're going through that transition to understanding that, it can it can somewhat weigh you down. I understand that. But that weight potentially that may be on your shoulders and sort of the dull sort of market movements at the moment or lack thereof, it is going to pass. And when it passes, that's of course when things get exciting. And I hope sooner rather than later that we are going to see this gap fill. Unfortunately, we're going to have to see a bearish day to actually achieve that. But once that is done, you want to see the market moving in the bullish direction without these gaps. Okay, you really want to see the markets move more or less open unchanged, but then see a bid during the actual trading session whereby you see long day white Morobozu candlesticks whereby gaps don't need to fill. This is leading us to believe again that this is part of the process whereby we're moving into a full-on-fledged Bollinger Band squeeze prior to the volatility break to the upside at this particular juncture. All right, so I hope that's clear enough for you. As at the close on Thursday, pay attention to these gaps. I will say that one more time, pay attention to the gaps. They will most likely fill, but at the same time, think about a bunch of these other gaps that we're starting to see. Mixed signals on the individual candlesticks, obviously, a couple shooting stars and gravestone dojis, but we are also seeing these gaps followed by, or at least preceded by, hammer candlesticks beforehand, right? Prior to, again, the continuation of these markets higher. We're above the exponentials, we're above the simples on Microsoft. On the markets themselves, again, you can see we're pushing back above that 50. Again, it's not all that important. The exponentials are moving sideways. More so is the longer term 100 and 200 day simple moving averages. In fact, we haven't even pushed below it, obviously the 200 on the S&P, but we're back above the 100, which is very important. The same is true for the Dow Jones Industrial Average. And when I show you this on the NASDAQ, have a look at this. All three markets back above that of the 100-day simple moving average. Now, the final thing I'm going to show you at this time is this little battle that's happening at this intermediate trend line. So again, I've been speaking about this until I'm blue in the face. And there have been moments, at least on the weekly time frame, more specifically on the daily time frame, whereby it's looked as though we were definitively pushing below or at least breaking it. Let me ask you the question right here, right now. And again, this is just simple truths, it's simple facts. People can either recognize them or they can sort of turn away and be blinded by essentially the truth in the market structure at this point. But let me ask you the question, rhetorical question, obviously, have we pushed below this little swing low over here? And obviously the answer to that question is no. And have we definitively pushed below, broken below, closed below, and begun trending lower than this intermediate trend line? The second answer to that question is no, it hasn't. So therefore, we do not have definitive signals whatsoever that the market has chosen to reverse, and as such, the status quo remains, right? Until we get a definitive push below this weekly candlestick just here, all right, you have to be optimistic, all right? You have to be positive about the future. And you have to expect that prices are going to continue in the aforementioned direction of the prevailing trend. That, of course, being to the upside. In fact, what we're establishing right now is, we're seeing the markets up on the weekly time frame on the NASDAQ, 221 points. Again, we've negated the majority of the losses that we achieved last week, whereby we started to see that of an engulfing candlestick, whether or not it was, technically inside the previous weeks. This weekly candlestick here, I know we're flip-flopping back and forth on the weekly signals, but again, it's really good to see, or at least a very positive sort of continuation to see these, or at least the sort of the losses, right? The paper losses, so to speak, or the market losses as at the close last week to be returned, all right? And that's simply what's happening. We'll see how obviously Friday plays out, but this is it on the Dow Jones. We're up 733 points this week after the very weak close that we saw on Friday last week. And when I flip on over into the S&P 500, we are up 77 points, all right, as at the close on Thursday, Monday through Thursday. Again, we're just seeing some form of a short-term consolidation right around, technically speaking, this intermediate trend line. It's going to be interesting, right, whether or not we can hold this. But even if we do break below these swing lows over here, the main sort of line in the sand, so to speak, is going to be the low that we established towards the end of May. And very early on in the period whereby we saw the reversal take place in June, and we just went sky high all the way through to the back end of July prior to, of course, this sell-off, which has now created that next higher low. All right, so you see how this is coming together? I really hope you do, and I hope you can appreciate this analysis for what it is. And it's really just an objective truth when looking at the markets at the moment. It is very easy to be swept up in the negative sort of, or at least the bearish sentiment right now. I understand that. I've been there myself many years ago, but now is not the time to be concerned about major recessionary pressures or an impending market crash whatsoever. When that time comes, I will speak to you about that, more so privately, but of course I will sort of touch on it obviously publicly here in YouTube land as well. But for the time being, again, you have to remain sort of resolute in your analysis and allow the market to ebb and flow, the market noise to push, or at least the boat itself of the market to rock sideways until we really sort of stabilize and then see the foundation to push off from, which I believe is really being made right now as at the month of August. All right, if you'd like to learn more, jump into that pro analysis class. I'm recording that as at Saturday, as I do each and every week. Other than that, everybody, enjoy your Thursday evening, and I will see you over the weekend in that pro analysis class. All the best. Have an enjoyable evening, and I'll see you in due course. Farewell.